Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm John Darsie, Editor-in-Chief, and together we bring you the Morning Call. So yesterday it was sort of business as usual for this rally, Scott. We continue to hang out near highs, but this morning we got a little bit of a change. We got futures down about 6 or 7 handles on the S&P. Could this be the start of that long-awaited correction?
Well, I think what's igniting the weakness this morning is the news out of Europe. Okay, and the news out of Europe right now is talking about how they haven't had any growth, and that even though their indices in their markets have had a nice increase or a nice rally, sometimes it takes a while for the actual fundamentals to follow through. And I think everyone's been a bit patient on that happening in Europe, but now the headlines are growing a bit louder, and people are starting to pay a little attention to the macro, which could, give us a little bit of that retracement that we've been trying to get.
Yeah, we don't focus a ton on currencies here at T3 Live, but it's something worth noting. It's something that people have been talking about a lot more. Is that currencies and devaluing of the yen specifically has been a very hot topic, and you see the euro weakening today. The dollar could be rising, put some pressure on U.S. equities.
Exactly, and as a trader, you want to follow indicators, and especially leading indicators. And I believe it was like a week or so ago we were talking about how the ECB was having their meeting. The euro was so strong that maybe Draghi would try and talk it down a bit. And if you look at what's happened in the FXC, this was right around this day. And now, yesterday there was a little weakness, and then all of a sudden you get some poor economic numbers like GDP out of Europe, and now we're opening up, I think, below this area here. So that's going to, give some strength to the dollar, which, correlates to a weaker stock market. And then you mentioned also there's been that big debate about, the Bank of Japan devaluing the yen and the rally that the Nikkei's had, and if you look at this trend line, look at this trend. This trend has been huge to the downside, and it also looks as if going to the chart from where the FXY was all the way down to where we are now, I would say at least cover your shorts. And those who've been looking for a counter trend trade here, maybe you finally get one if the FXY could actually close above 105.5, 106, could give you a counter trend move, which would then perhaps also give us some weakness in the S&P or our markets.
Yeah, it was a few days ago the G7 came out with a statement following their meeting. They basically came out with a statement that said they weren't going to target interest rates, and they weren't going to do anything to check sort of the devaluing of the yen. And then they didn't get, I don't think, the reaction they wanted to from that statement, so they came out a couple days later and said that statement was misunderstood and stuff like that. So I think this morning they might be getting the result in the euro currency that they wanted.
A little backlash.
Yeah.
So with that said, we take a quick look at the chart of the spiders, and you'll see that we've been in this ascending channel since the start of the year. Here's that gap up on the first day of the year, your digestion. This was your spot to get into some of your key longs or your swing trades. When we broke above 1474 in the S&PX and 148.11, this was a spot where I think I got the majority of my positions, or I was at my peak. And then as you continue higher, you always want to trim and trail. So yesterday it looked as if we were going to close right around 330. This looked even more bearish. I think Charco put out a chart on Chartly if you want to take a look at. But right now we're down about 5-6 handles. As far as 151.72, we're now below it. The 8-day moving average now stands at 151.43. So far, we've 3 times in 2013 we've touched it. This one we closed on it, gapped up. This one we closed through it, gapped up. This one I know intraday we were below it, closed above it. So let's see how we handle it today. Let's see if anything has changed. If we get some kind of potent move below it, never hurts to be a little bit more neutral and maybe even make a few shekels short.
Yeah, we talk about leading indicators as ways to sort of get ahead of a potential pullback, and we've been talking a lot about the financials as a leading sector that have been dragging the market higher in the face of some weakness from tech. And yesterday we saw a few signals from the financial sector that could show the momentum is slowing at least.
Yeah, well, 2 days ago we had that nice add-on trade in Citigroup and Bank of America and the financials. Then yesterday, into the strength, we talked about selling some, and then I think it was right around 3:30. Someone pointed out, like, Red Dog, look at J.P. Morgan. Look at that ugly, engulfing candle. And I was like, that does look a little bit different than we've seen. If you go to the chart here of J.P. Morgan, this is the first time you have J.P. Morgan where it was at the highs, closed at the lows, and it didn't break this trend. And this has been a very, very strong trend. But for an active trader, this was a clue. Maybe lighten up overnight, maybe add to your spider short or whatnot. Because if it does, just say close below 48.50. you could see a move to the 21-day, which is down to 47.60, and that'll also be, the first time since, touching this area back right around New Year's. So, just something to pay attention to. Nice ascending channel. If it breaks, you could get a little bit of weakness, and why not? It's been a hell of a move.
All right, we're going to transition to sector spotlight and check up on some of the tech names that traders focus on often, some weak, some a little bit stronger. After earnings, you look for stocks that gap up and stay in motion. It's a theme we talk about a lot, especially when you get a pullback. That's a great time to identify relative strength. And a stock like Netflix, for example, had great earnings and has continued to run higher after that blockbuster report. That could be something that traders look to long after a pullback, right, Scott?
Yeah, especially today when the futures are a bit weaker. This stock went out on its highs yesterday. Since earnings, there's been multiple setups. There's actually been more long setups than short, but there's been a few cute shorts in there too. But right now, if you look at where we are with Netflix, the chart is very powerful. Like you said, huge gap up. People would have loved it to go sideways here. It didn't. It traded above that earnings high of 149.17 and took off. Then you had this nice bull flag pattern where you had some momentum, and now it's stair-stepping again. So right here, at this particular level, maybe it's down $1 or so at the futures. So if it shows relative strength, I think my guys on the active level are going to be looking to buy it. If it starts trading through yesterday's high, or our guys, 186.40-ish to 187, you could see new highs in Netflix. So at this point, guys will be looking at Netflix today to see if it gets any momentum, because that's where the scarce momentum has been.
And on a percentage gain basis, LinkedIn hasn't been quite the rock star that Netflix has, but it has a very bullish setup. I know you talked about it a lot prior to earnings, talked about a call spread. The stock gapped up to new all-time highs and has continued higher.
Yeah, this one has been one of the chosen ones, had the ingredients, been public for 2 years or less, tight float, executing on earnings, and more importantly, look at the price action. You go to the chart, same type of scenarios as Netflix, where on the first day you had a big move, opened a little bit below it, and then you had another trade here above 150, 189, and now you see right here it's not pulling back. So if you don't want to put on a core position, I actually understand, because it's hard for me to do so too, but if it is down a little bit today with the futures, it starts going positive, you can get a nice quick trade above 157.77. This is 158.90. This is in the cards to continue. Granted, momentum trades are difficult at these upper levels, but if you do it quickly, it could be good for cash flow and something to do as the market tries to figure out what's next.
And Amazon is one that has weakened since earnings. It's a high multiple stock, somewhat controversial. People talk about they don't make a ton of money, but the stock continues to run higher. And the stock had weakened considerably after their report. But then yesterday, just as traders started to lean a little bit into shorts perhaps, what does Amazon do? It squeezes with a sharp move higher.
Yeah, this one gets me all the time. Like 2 days ago, I was short, made a little bit of money, and then got stopped out. And then when it closed on the lows below the 50-day, a lot of us took it home short. The same way as hitting on an 11 versus a 6 playing blackjack. If you get a 5 and the dealer turns over and 4 gets a 10, you did the right thing and you just didn't get paid. And if you look here at Amazon, you'll see right on this day, when it closed below the 50-day, it looked as if it was going to break this lower wedge to the downside. All right, and then on this little, it gapped up by $2-3. Just because I'm not good at Amazon, I covered it anyway, even though it didn't reclaim that. And then if you didn't, you had to make a quick decision yesterday as it gapped up above the moving averages, closed strong, broke this wedge now to the upside. So, today it's probably down a little bit with the future. So I'll look to this to see if you see some kind of divergence, maybe buy it when it's negative, and if it gets above yesterday's high of 269.96, it could continue. So I would say today, when you have red arrows in the futures, stocks that close in their highs, like in Amazon, Netflix, and LinkedIn, are probably good to look to see if there's any continuation.
Then there's the case of Apple, which had a multi-day bounce, its strongest bounce since that big sell-off and the sell-off after earnings, but it got rejected at some short-term resistance. It still is in that big downtrend that we saw develop since it broke down below 700 or from above 700. Is this something that's going to be on your radar, Scott?
Yeah, finally it was nice to get a 3-4 day bounce in Apple. That helped. And then once Tim Cook took the keynote, he kind of let a little bit of the energy out of the bag, so to speak, because he didn't say anything that really the fast money wanted to hear. Some of the long term, like Goldman Sachs, some other guys said that they're still very bullish on the story. They came out yesterday and they were put their buy recommendation. Anyway, you look at the chart. There's a few important things going on right here. You go right here. You see this was the peak back back in September around 700, and you see a descending trend line being built, controlling this stock during this entire move all the way lower. Okay, so what did we have here? Just a nice trade. Okay, nice trade. This was your first potent day. Here was some continuation. We talked about this gap getting filled. We also mentioned a few times about, this pivot, which was the pre-earnings low, and that wound up being resistance. So now the question is, can it hold higher? Can you see a little bit of commitment to what was this 5-day move? So here's your low, okay, which is 463.22. If it gets there and holds, maybe you nibble a little bit, but and then if it starts to, get back above this area, maybe above 475, next time it tries to get through this descending trend line, if it has huge volume, maybe as we get closer to the shareholder meeting, it could get a more meaningful move. But last week was something that we were definitely looking for, and thank goodness it happened. Now I think it's more wait and see, but I still think it's in the game to show some commitment to last week's move.
And if we're talking about tech, we sort of have to talk about Google. It's getting a little bit choppy at highs. Is that something that's going to be a focus of yours? Do you think it's a little bit out of play after its recent move?
I think it's tough. Every now and then you get a nice momentum move in Google, but it seems like you get downgrade after downgrade and it doesn't go down, and then finally once you're worn out, it goes up. So it hasn't been the easiest thing to deal with. But as a macro investor, if you started buying it last year or the year before at historic highs, you're doing well. There's times when Google's very tradable and times when it's just a hold. And if you look now, this was the last time we talked about it as an intermediate swing long when it broke above this descending channel here, which was right around 675. From there, you had a nice move up, and if you didn't take it on earnings, okay, you had your gap up. And this gap up we talk about in our swing trading course is welcome because it gives you energy and it gives you points of reference to trade against. And then it got tight, traded above the 760, then held it, and now it's just it's just methodically moving up. And I do think that it would go a lot quicker if they announced some kind of stock split and left their egos at the door, but who knows if they don't. At some point they'll start looking at it as a blimp in the sky and everyone will target it because it's too high. But anyway, this is your level here, 780, 790. If it gets above there, it could be the road to 800 pretty quick. It's above the 8, it's above the 21-day, acting very well. This one has been best in breed so far in 2013 for high beta tech.
All right, well, we'll take a quick commercial break before we jump in the trenches with the 3D printing stocks.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
All right, welcome back, everyone. As we go in the trenches, we're going to talk about a sector that's really been in the spotlight recently. As the 3D printing stocks, they became even more high profile as President Obama talked about them in his State of the Union address, talking about their potential to revolutionize manufacturing in the United States and be a growth driver for us. And I know for momentum traders and active traders, these have been very much in play stocks, if nothing else.
Well, if you were an investor and you found them a year or two ago, that's also been really good for you. I know for me, I was a little behind the 8 ball. I started looking at them maybe 6 months ago, and recently people are trying to figure out, is it too frothy or is there really innovation here, as the president did state? And I think after his State of the Union, those stocks looked a little bit, testy, or looked like they were trying to break down, and then they gapped up yesterday. So it's interesting. So as far as Triple D, the leader in this whole group, you look here, you will see, it was up at this like flag type perch and broke below with a very potent wide range bar. Some guys actually made money short there. Then if you remember, right around here into the 50-day, it was a nice little active trade again to the long side. So from there, you had a bounce up, and now it's flagging again. This was the day before the State of the Union. Looked as if it was going to come back down to the lower end and then wound up holding in there. So I think from an active trader standpoint, you have an inside range here where if it starts breaking below this 62.26, it could come right back down to create a lower end of what has been a bigger wedge being created. But if it hangs in here and hangs higher, I think momentum guys will be looking to buy this thing above 67.75 for then what could be a move to take out the recent highs.
And Triple D is the biggest name and the strongest name in the sector, but you had some signs yesterday from some smaller names in the group that there could be some weakening going on in this sector. And SSYS Stratasys showed a lot more weakness yesterday than Triple D did.
Yeah, this one I think has definitely been showing signs of weakness, so to speak. And they also, I know it's less quality as far as the stock, but also they didn't announce a split. I think I always say this, a lot of these type of momentum names, it's psychology and it's price also, not just your fundamentals and valuation. What's the difference between a PE of 98 or 110? It doesn't matter. It's chart patterns and psychology. And if you look at the chart here, this one doesn't look as bullish at all. I don't know a lot of the fundamentals. All I will say is that this one looks weaker. You had your gap up, right? And then it closed on the low, so that was a sell signal. Then when it broke this ascending trend, or this, this little uptrend that was intact right there, boom, came down, was a decent scalp long versus support, came back up, and then you had another ascending type channel that broke to the downside. And this one is at big support. It's below the 50-day moving average. So to me, this is not best in breed, and this does look lower. If, I guess, Triple D goes to new highs, it might drag this up. But for right now, this one, if you're looking to short one of these, this one's more shortable than the other.
Yeah, and the SSYS is one, we don't, especially when you're in an uptrend and a strong tape, we don't talk about a lot of short setups on off the charts and in our morning calls and stuff like that. But we talked about SSYS as a potential short out of that ascending channel on off the charts several times before it broke. The other one in the name that's been a focus of momentum traders recently has been XONE. XONE is the symbol. It IPO'd last week, a hugely successful IPO, but it started to weaken a lot this week. Is that something that you're trading at all, Scott?
I traded it on the first day, and it actually showed a lot of demand. We talk about the rules of the first day of trading, and this one, opened up, I think, around 24. Within 15 minutes, it broke above the opening print, showing you there was demand for this new issue off the bat. And then, after the first or second day, let's go to the daily chart, it then gets tricky, because it's only been public now for 1, 2, 3, 4, 5 days, so there's not a lot of price points to look at. This was your first 2 days, and now I guess you could say, it's trying to hold above this area. So, here is your new little chart pattern here. Here's your inside range. I think it gapped up with the group yesterday and then came off those lows, so here's your inside range. I would just give this more time to develop more of a macro pattern here, but overall, it's in play, and there are guys that are chopping it around a little bit.
Yeah, and Proto Lab is another stock that sort of fits in the sector. PRLB is the symbol, and it had a very strong earnings report and a big move yesterday. Is that something that you focused on at all, Scott?
I haven't even heard the name yet,
yeah.
So let's take
it's
a look right now.
It's one that Steve LeVay and the Momentum guys in their room, they've been focusing on it. They're always very good at finding the volatility and the momentum. It's something, if that's your style of trading, you should definitely watch them and pay attention to the stock.
Yeah, I'm trying to find the daily chart right now here where, wow, look at that move. Okay, so if you were there and you traded it close near the highs, congratulations. It shows you that there are a lot of things to always look at. And let's go to the weekly chart real quickly on this. This one, seems as if it hasn't been around that long, and here you are at new highs. If you found this one early, congrats. If you were looking at it technically, I don't know how it gapped up yesterday, but once it cleared this little price point, you then had a nice area above 45 for it to take off from.
All right, we'll jump right into quick hits now. We'll start out with some stuff from the State of the Union. The State of the Union didn't move a ton of stocks, but one of the big talking points was raising the minimum wage, and it had an effect on most notably McDonald's. The stock sold off about 1.6% yesterday after that talk. It's breaking down a little bit. Let's just take a look at that chart. It's not one we often look at.
Yeah, this one's been trying to regain some footing in 2013. If you look here real quick, not a barn burner, but you had a quick move to break this downtrend from the highs, and it's still holding in there. I don't think this was such a drastic move based on the whole minimum wage talk, but it's still above the 8 and 21 day. If you're a macro investor in McDonald's, I don't think you sell on that news.
And then everybody was focusing a lot on the solars leading up to the State of the Union as a possible talking point for the president as he tries to transition us into sustainable and clean energy. But it was sort of a sell the news type event, which is something you see often from the solar sector, which a lot of people are very skeptical about whether solar has any future as part of our energy plan.
Yeah, and Mark has been all over this like 2-3 days ago leading in. People like, I know Mike Lee was talking about it too, look at these solar stocks, they're moving. We said, okay, could be a good anticipation trade into the President's State of the Union, but don't take it long into it because, you know, maybe you'll miss out if he does mention it and gets an additional pop, but historically it doesn't happen. You look at FSLR, you know, here is a nice, you know, low right in 28. Then this was a nice move for traders when it broke above this descending channel, when it cleared this, just say 31.64, and then you had a reason to sell it. You got your 2-day move before the president, and then yesterday it engulfed that entire move. So I would say make sure it holds above this 31.50 if you're around there, and if it starts trading below there, just get out of the way, because when momentum leaves these solar names, you know, they don't come back too quickly.
And GE is another stock we're going to talk about. I know you've been long it for a while, Scott, and you added actually earlier in the week. Before yesterday, they announced that they're selling their remaining 49% stake in NBC Universal to Comcast for around $17 billion. Stock gapped up yesterday on that news and continued higher.
Yep, this has been a really nice one since earnings. Multiple different strategies, from a call spread to buying it after, you know, the earnings, and then there's been 2 different ads. If you look real quickly at the chart, at this point, it's just a hold. Hopefully, you know, you got involved with this wedge pattern and then maybe added a little bit above 22.20. And then I was holding in the space at tier 1. I added as it looked good, not knowing news was coming, but looked like it was going to leave this pattern here. And then I got lucky with some news. It's now above the previous highs. At this point, I would just hold some, and it's going to take a while to get another tight pattern before you can sink your teeth in again. But if you're involved and you were holding it as a swing trade and made your money, and there are actually some active strategies within there too to add cash flow.
Another position that popped up on your virtual trading floor yesterday that we haven't seen, we've seen it a little bit but hadn't seen it in a while, is Microsoft. A lot of people talk about how it's a dinosaur in tech, but we've seen some of those type of names perk up a little bit. Is that your rationale for looking for a long in Microsoft?
It just shows you that there's so many, I'm running out of good ideas,
yeah,
which is a reason why I have a lot less exposure on right now. But if you look at it, it looks interesting. As a lower level trade here, I've been involved in it actually for like 3 days. Let me get rid of some of these things here. As you know, after the DELL news, the run we saw in Hewlett Packard, this and that, when this downtrend got broken, you know, right when it turned up here, I added a little bit, and now it's coming into resistance. I would say I'm going to stay with it as long as it stays above, just say, you know, this 27.75-ish, and then who knows, maybe you get a momentum move in Microsoft if you could actually clear 28.23 to then test the 200-day. But overall, you know, this stock is a laggard, it's a behemoth, but I'm just trying to play a lower level catch-up play, which some guys caught before the news in DELL down here, and even in your Hewlett Packard, which, you know, off the lows, you know, came back up, and, you know, these things look okay. So Microsoft, to me, maybe they'll come up with something to unlock their hidden value.
Yeah, I mean, they need some better leadership. They have a ton of cash. Talk about Apple having cash, Microsoft in the same situation. They just cannot innovate at all. All these product launches they have been very unsuccessful, and they need something to be shook up over there. I
think they call it microcat.
Yeah,
because they just copycat everyone else's things, and they come out, you know, a few quarters later.
Yep.
Anyway.
We also talked about in a blog post last week and on Off the Charts about a few stocks that, just like we like to see gap ups, hold, and go after earnings, we look at stocks that gap down and hold lower after earnings as potential stocks to be short. And one of the prime names is VMware.
Yeah, VMW wound up working for guys. Gap down. There was no interest down there, so what does it do? It can continue. And you look at the chart here, this one actually worked best out of those strategies. You had your huge gap down, went sideways. It could have traded above 80 and retraced and been a nice long, but it didn't. It wound up, you know, resolving to the downside. And if you take a closer look here, you will see this could have been your day one short once it engulfed these 5 or 6 days, and then it just continued all the way through that the last point of reference here, which was 76.25. So nice little short strategy for those looking to get short something that at least you had some tactical approach to.
Just we'll mention briefly, you know, VMW is one of the big cloud stocks. Rackspace is another in the cloud space that sold off sharply. It could be a sign of some weakening in that sector. It was, you know, before 3D printing was the craze, it was cloud computing, and people love these new revolutionary ideas they don't understand.
Yeah, well, exactly. They stay there until the momentum leaves, until you see some cracks in the armor, and that's what we're starting to see around here.
Yep, and another name in tech that was weak after earnings is BIDU, that traders were looking for possible continuation to the downside.
I did short that yesterday, thinking it would get the same type of move as VMW because it was a similar pattern, but it just didn't work as well. You could have nickel and dime it, but all in all, it reversed. You look here, it's still, this one, the jury's out still. Okay, you have that gap in the chart from earnings. It's slowly in this little pivot. It tried to break below 95.31. It couldn't. You had to be really quick to make a little bit of money short there. And you still have this small downtrend. So I would say this one still, I wouldn't get aggressive either way. But if it starts getting above, just say 97.5. On volume, perhaps it tries to fill some of this gap. If it breaks below yesterday's low today, it can continue down. This stock has been in a very poor trend, but every now and then, when it looks its worst, they save it. So at this point, just have over a confirmation or have a little less size.
And the last name that we include in that blog post is a weak one on earnings that looks like it's hanging by a thread to a major level is Coach, and that could be one with some market weakness. Maybe traders turn to a name like that.
Yeah, this one, this has also been one of the names that's been battered and bruised last year. Some retail worked, this one didn't, and now it's hovering on big support. You look here at the chart, this is major support, okay, in Coach.
It's a little bit like a head and shoulders to me.
Yeah, right, left shoulder, head, right shoulder, but sometimes these necklines are strong. But, you had a small pivot right there that, we take a closer look here. Let's go up. Hold on, there you go. That wound up resolving below, which was right here. Here's big earnings. Couldn't rally into it, so this was a nice short entry right there, and now look where it is hovering again. So if Coach were to start breaking below 48.38, you could get continuation, but again, it's always really hard at this area. This was a bit more tactical and paid some traders. This one, it could happen again. Just know if you're good at that type of trade, which I'm typically not.
All right, well, that'll do it for today's morning call. With the futures down and maybe a little more volatility coming into this market, this could be an interesting day where traders switch gears a little bit, but we'll be watching it closely. We'll see you out there.
Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3-LIVE.